Welcome everyone to Vested Interests. This is Shane back for another stock portfolio update. This will be coming to you June 26th. We will cover what stocks we purchased last week. But before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thanks to those who have subscribed to the channel. It is because of people like you that we continue to grow. Seems like every day I see one or two new subscribers, up over 150 subscribers currently, so really appreciate that. For those of you who may be stopping by for the first time on this channel, we focus on a passive income investing strategy by buying stocks in good companies that pay dividends. It's not rocket science. In my opinion, the best way to do anything, keep it simple as possible. So it really boils down to consistently investing, buying dividend growth stocks and growing companies with positive cash flow that covers the dividend, companies with a high return on their invested capital. I utilize both a dollar cost average approach, consistently investing into the stocks in the portfolio on a bi-weekly basis on a minimum, every 2 weeks when I get paid, but pretty much I do put some money to work every week, or at least have been recently, and that's what this video is going to cover. So I do a video like this every Sunday. I also do some stock pick of the day videos throughout the week to provide what I feel might be entering fair value, currently in fair value, or maybe potentially something to stay away from that may have pulled back but still is not valuable as well. So check out those videos throughout the week. If you'd like to check out, or if you'd like to help out the channel, hitting that subscribe button and hit the notification bell as well really helps out. That is the way we continue to grow. But I also have a Webull app link down below, so if you are interested in opening your own brokerage account, go ahead and use that link. You'll get some free stocks. I'll get some free stocks. You don't have to use the link, but if you have not started investing, I would recommend you do so. It is really the only way to financial security, financial freedom for you and your family, living off the passive income provided by the dividends in the future. With that said, let's jump right into the video. As you can see here, we added $1,346 and some change, but $1,346 in new capital added to the portfolio. With those funds on June 22nd, as you can see again, $1,346.98. We put that to work, and with those funds, we started picking up 2 more shares of 3M Company, ticker MMM, at $131.17. 3M is in the industrial sector. To me, anything under 150 is a buy, so 131 for 3M is a steal. It is a monstrosity of a company. They do have some headwinds currently with some recent litigation that they have settled, so they will be paying out some funds, but they've got plenty of cash to cover that, and they've set aside for those purposes. So I'm taking the opportunity in this recent dip to really add to this position. I'm up over 50 shares here currently, and again, so long as it's under 150, I'll probably continue to add it until we reach about 100 shares, maybe a little bit more. After you get to 100 shares, you can do some stuff like sell covered calls, that sort of thing. So I'm looking to do that in the future. I don't currently do that now. We also picked up 3 shares of Intel Corporation, ticker INTC, at $37.62 per share. Intel is in the information technology sector. We kept going to work at Bank of America. We pretty much have been adding every week to Bank of America. 5 more shares, ticker BAC. This is in the financial sector. We picked those up for $32.75 per share. And for Intel, anything under 50 is a buy for me. So anything under 40, again, is a steal. Bank of America, anything under 40 for me is a buy. So anything under 35 is a steal. We added 6 more shares to Omega Healthcare Investors. This is a REIT. They own and operate healthcare facilities for the elderly. It's elderly care, basically. So ticker OHI, again, out of the REITs and real estate sector at $28.18. Anything under 30, I'll continue to buy for Omega Healthcare Investors. LyondellBasell Industries, ticker LYB. We picked up 2 more shares there at $87.15. Under $90, and really anything under $100 for LyondellBasell is a buy for me. Anything under 90 to me is a steal. This is in the material sector. This one right here, they take basically oil products. They produce oil products like plastics, that sort of thing. So again, material sector for LYB. And they recently actually paid out, which you'll see in the dividend payout video that I'll do once June wraps up. It'll be for maybe the first week or the last week in June, first week in July. I'll do a video on what was paid out in dividends for the month of June. And LyondellBasell actually recently paid out a special dividend. For me, it was a little over $200. It was a significant payout. So again, they rewarded me, so I'll continue to add to that position. Prudential Financial with the recent pullback here, another one in the financial sector, ticker PRU. We added 2 more shares, $93.35. I started a position in this around $107, $108 per share, so it's definitely below that cost basis. And so long as it remains under 100, I'll continue to add here. Really, if it remains under my cost basis of 106, but that is coming down now that I'm picking up shares below that. So anything under 100 for me is a buy for Prudential Financial. We picked up 2 more shares of US Bancorp, ticker USB, another one in the financial sector at $46.46. Anything under 50 for me is a buy here in US Bancorp. So as you can see, we're seeing a lot in the financial sector here that looks like good buying opportunities. One more in REITs and real estate, and that is Stag Industrial. They own and operate industrial centers, industrial properties. Ticker STAG, again out of the REITs and real estate sector at $30.55, 4 more shares there. And then we added lastly 2 mining companies. Vale is a Brazilian mining company. They provide a lot of nickel. Actually had a recent, also out of the material sector, and they also, Vale did a recent agreement with Tesla to provide all of their material for their batteries. So we added 4 shares there at $14.66. Kinross Gold, another one in the mining company. So both of these are in the material sector, both mining companies. Kinross Gold, ticker KGC, we had a little bit of funds left over, so we picked up 1 more share at $4.24. Gold has pulled back a little bit as the economy, or not the economy, but as the stock market in general has ticked up a bit. So that is the activity for the week. The only day we really went to work was June 22nd. Again, $1,346.98 added to the portfolio. And a quick look at the overall portfolio update. The total value is $115,241.87. Not that that's super important, but we are down a little bit on the year, about 1.8% down. The overall market, I think, is down a little over 20%. So compared to the market, we are doing very well. Dividend yield of 4.718%. That is down a little bit as some of these positions have come back up. I think last week we were at 4.9%. Annual dividend income. This is what it's all about. The portfolio continues to kick out passive income in the forms of dividends paid out by the companies within the portfolio every month, every quarter, every year. And this continues to grow whether the market's up, down, or floating sideways. This will continue to grow as I add capital, as the companies within the portfolio increase their dividends, and as the dividends are paid and then reinvested to buy more shares, fractional shares often is the case in the companies that pay them out. So currently sitting at $5,437.47. Again, I think on average we are growing this weekly by about anywhere from $60 to $100 a week in passive income based on the amount we actively invest and the reinvested dividends as well. So sector breakdown, communications, we're sitting at 9.85%. Consumer discretionary is sitting at 3.64%. This is one sector, consumer discretionary, that I am currently looking to add. There are some positions that are getting very attractive in my opinion. We looked at Stanley Black & Decker last week. That's coming into a very favorable cost basis in my opinion. Target as well. If it came down a little bit more, Target that is, I may look to add that. There's several others, Best Buy in the consumer discretionary, that in my opinion may be at or reaching fair value that I'd like to add to the portfolio. We will continue to watch those, and again, as they come into fair value, if they come into fair value, we will add them to the portfolio and increase this section of the pie. Consumer staples is sitting at 8.31%. This is another one. If any of the positions dip down, most of the consumer staples have been above my cost basis significantly, so I have not been adding to them. But if they do pull back, that's another section I am looking to add to, because consumer staples typically does well during high inflation and recessionary times, which I think we are in or have been in for a while. Actually, I believe we've been in recession since 2019 and only been propped up by the Fed stimulus and low to no rates environment that we've been in. And as the Fed raises rates, historically, Fed rates has been between 4 to 5%, closer to 5%. And I remember I bought my first house in 2004, was it 2003 or 2004, when I was in the military in Utah, and my mortgage rate was over 7%, and that was actually considered cheap at the time. Really, it had just come down from 8 to 9% into the 7% range, and everyone screamed, buy a house, buy a house, buy a house. So it's kind of funny to me to see everyone freaking out with rates going back up. Still historically below normal historical averages at, even at 4.5 to 5.5% where it currently sits, is still really low and much lower than when I bought my first house. Again, I think it was in 2003 or 2004. And then we're looking at energy sector is sitting at 9.31%. Financials is 11.68. Healthcare is sitting at 10.45. Industrial is sitting at 12.14. Technology, information technology is sitting at 12.85. And materials at 6.38. Utilities at 1.66. This is another one I'd like to add to. NextEra Energy is really the only utility company in my portfolio currently. Excuse me, I just sold off DTE for a profit to reinvest in other areas. That was another utility in there. So I'm looking to add maybe 1 or 2 more utilities, but that's another one. These ones are pretty much all up right now. They do well in times like this as well. Consumer staples, energy, and utilities typically do real well with high inflation as well as recessionary times. So love to add to them, but the cost value, the cost per share value right now is pretty high on all of these. So as they pull back, I might look to add a couple more. And lastly, REITs and real estates at 13.71%. As you can see there, we added significantly to this, and we've been adding significantly to the REITs and real estate portion with Stag, with Store, with O Realty, the monthly paying REIT, Omega Healthcare Investors, which I added to this week. Those are all REITs that we've been adding to. So this one has crept up a little bit, has become the biggest portion of my pie. And I'd like to take a quick moment to thank you for watching. Don't forget to subscribe, hit the like button, share with anyone you think might find value. Drop a comment down below. Let me know what you think of the video. And that one will wrap it up. Let me know how your portfolio did this week. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit the thumbs up, ring the notification bell, subscribe to the channel, drop a comment down below. Let me know what you think. Do personally read and respond to all the comments. I'm always interested to read your questions, opinions, suggestions for future videos, constructive criticism as well. Drop it down below. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, I hope you're having a great weekend. We'll see you next week. We will start back up with the stock pick of the day. I'll probably have something coming out later in the week, maybe Friday on the 1st, for a watch list for July, what I'm looking to add, where I'm seeing value again for June. We've been really focused on financials, the REITs and real estate sector, and some of the industrials that have pulled back. There may be some other areas we focus on for July. I'm actually looking if Intel continues to stay down, Cisco, maybe we focus on information technology. Hopefully some consumer staples pull back. We can focus on some of those as well. But again, we'll let the market come to us. Don't go chasing those high stock prices with stocks pulling back as they do. Find the value in the market. Where there are pullbacks, look to add your capital, get the highest yield possible at the best prices. Find out the intrinsic value of the stocks that you're really interested in. Sit down and look at their balance sheets. Sit down and look at their return on invested capital, their profit, their debt, most importantly, their free cash flow. And is their free cash flow covered by the profits and the dividends paid out, covered by the free cash flow and the profits that they make? That's where you want to be. You want to be in real companies that are making profits in times like these, so that you can make sure that your dividends are safe and that passive income is safe and growing. Again, we'll see you this week with the stock pick of the day starting on Monday. Have a great weekend. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can lose money and should never invest any amount you're not comfortable losing. Always do your own research and invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.